What is up, everybody? William Huffman here again, your hopefully kind of semi-likable real estate agent here in the state of Minnesota with RE/MAX Results of Good Life Group. You know the stats, you know the deets, 1.73% for RE/MAX in the world. I think I'm going to stop saying that here pretty soon because I honestly don't like saying that. It sounds conceited, but I have to build trust with you somehow by telling you how amazing I am, right? Just know I'm really, really good, and if you're this far into my content and you don't believe that, what? Are you on drugs? I don't know what you're saying. I probably shouldn't insult you. Keep watching. Oh, man. My additive's going to be like, what are you doing, Will? I don't care. I really love doing this and having a great time. But I got all the stats. I got all the stuff. I am good at this. You can Google me. Don't do that. Stay on YouTube. William Huffman at RE/MAX Results of Good Life Group. I know that was a weird intro, but we're going to leave it that way because I want you to know kind of just who I am and get to really understand me and why I'm doing this. Maybe not why I'm doing this. I'm doing this because I want to. And hopefully I'm going to get buyers and sellers out of it, to be quite honest with you. That's why I do this. I do it because I enjoy it, but there needs to be an ROI, return on my investment. And that's actually a great segue into what I'm going to talk about today. Today I'm going to talk about mortgage rates. Oh my God, mortgage rates. First of all, I'm going to give you 2 or 3 interesting insights about mortgage rates that you probably didn't know or didn't fully understand. And I have a disclaimer here. Big, shining disclaimer. I am not a lender. I am not giving you advice. I am not telling you what to do. I'm not even suggesting you do anything other than talk to a licensed mortgage professional if you have further questions about this. And I have Wendy Rogers and I have Scott Roiger. Hopefully they disappeared right there. And you can contact them and ask really in-depth questions about what's going on here. I'm going to give you my educated but not licensed to give you advice professional, whatever we call it here. I'm just going to be talking to a buddy called you. So mortgage rates. Now, they're all over the place. Now, we have some people who like to say, well, when I bought my first house, my rate was 17.98%. Bro, that was like 90,000 years ago when your house cost $2 of crayons. Okay? Calm down. Like, I understand back then your interest rates were significantly higher, but also the interest on the principal was significantly smaller than what we have now for principal. So principal is the loan amount. So principal is the amount that you pay for the product. So in this instance, let's just do $300,000 home. If you have a house that you're paying a mortgage on, that is $300,000. There's 4 things that we're going to be talking about: your principal, your interest, your taxes, and your insurance. Now, typically what's going to happen is your taxes and insurance are escrowed, paid in advance to the lender, and the lender pays your taxes and insurance for you for 2 reasons. 1, taxes hold first position on the home, which means if you don't pay your taxes, the government can foreclose on your property and seize that asset to pay those taxes. And insurance. They want to make sure the asset they're lending money out on is insured. So typically your taxes and insurance, your T and the I, are escrowed every month. That's where a part of your closing costs come from. So I'm going to diverge for a little bit second here. When you buy a property, your closing costs are typically about 3% of the purchase price. They cap out around between $12,000 and $15,000, and they can go up, but that's when we get into like astronomical price ranges. You have closing costs, typically around 3%. That's because you're prepaying your taxes and insurance into your escrow account because the lender is going to want that to pay your quarterly tax, your yearly taxes, the bi-yearly, twice a year, whatever one that is there. So taxes and insurance. Even though you pay your insurance, they collect money on the side because if you stop paying, they pay your insurance premium for you. Now that's the T&I, and the first part is the P&I, so PITI, principal, interest, taxes, and insurance. Principal is your $300,000. That's what you bought the property for. Then there's your interest. They say there's like 7 wonders of the world, whatever that is, and the 8th is compounding interest. It's a crime. I am not a fan of it. I can't change the rules, but here's what it is. When you're paying your mortgage payment, it's those 4 things we talked about, your PITI. And in the beginning, they're front loading a lot of that interest. They're making you pay a heck of a lot more interest in the beginning. So when you look at your amortization chart of 30 years, you're going to see in the very, very beginning, a couple hundred, say if your payment's $2,700 a month, $200 to $500 on the high end is going towards your principal. The rest is going to your interest. Banks are going to look out for themselves numero uno first. Like, banks don't care about you. I apologize. I ain't trying to be rude. If you're a banker out there, you may care about them as an individual. Banks, lending institutions do not care about consumers. It's the absolute truth. Now I want to talk about interest rates a little bit. Interest rates are not guided by the Fed. What that means is when the Fed drops the prime rate, it affects things like credit card interest rates, car loans, and a lot of other things out there, savings accounts. It affects a lot of things like that. What the mortgage rate primarily follows is the 10-year Treasury yield. Why? I don't know. Okay, I really don't know. I could read a report and tell you because of the economics of this and that and blah, 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 blah. Long of the short is, look at the 10-year Treasury yield. Typically, your mortgage rates follow that pretty darn closely. So the 10-year Treasury yield is a strong indicator, but not the only indicator of what your interest rate's going to be. Now, of course, there are certain factors like your down payment. There's going to be factors such as your credit score, your worthiness of borrowing your credit worthiness, I should say. Everybody's worthy of a home. I truly believe that. Like, if a side note, homeownership should be a right. Right now, it's a privilege. I truly believe it should be a right, but here nor there. Your credit worthiness depicts a lot of what your credit score is going to be. Say there's a clone of me sitting right here, and say I have let's say 800 credit score. I don't. I am not perfect by any means. I think perfect credit score is 810. I don't even know what it is, whatever. So 800 credit score. Everything is equal, down payment, purchase price, income, everything. And there's a clone of me right here, and their credit score is 650. My interest rate at 800 will be significantly better than theirs. Now, I do believe that it's 740 is considered a perfect credit score in the mortgage world. Now, I may be wrong, and what I mean by that is anything over a 740, the rates don't get better. If I'm wrong, don't yell at me. Leave a comment. Actually, leave a comment. Engage that algorithm. Just because the interest rate say it's a 5, now there's this weird thing called overlays. Now, Fannie and Freddie and Ginnie, those are the government agencies that buy up FHA, VA, USDA, all these government-backed loans, and they have a requirement. Say their requirement is, okay, here we go. Love this. If I want to get an FHA loan and I go to the FHA.gov website, it's going to say I need a 640 credit score, I need 3.5% down, I need 2 years of employment. Cool. Awesome. I think those are right, but I may be off a little bit. Just go with me. Now we're gonna go to big bank. I'm not gonna say any banks because I don't want them to murder me. That'd be horrible. So say you go to a big bank, and a big bank has these 6 different boxes, and in each one of these boxes, you have to fit in one of those 6 boxes. And all of a sudden, you fit in this box, and according to the FHA guidelines, you fit in this box just fine, according to you. But big bank is going to say, whoa. I have an overlay. An overlay. Not a layover. That's when you're stuck in an airport or something like that. An overlay. And they say, okay, FHA, Freddie, Ginnie, Freddie and Mac and all those guys, whatever, they may be okay with a 640 credit score, but I want to see a 660 credit score. And they may be fine with the rate of 5%, but because you're going to go through me and my bank, my overlay actually adds 1 whole percentage point to the interest rate that you could get somewhere else. This is a real thing. Banks, lenders, originators, they all have different overlays and different fees. So this big bank, you have to fit in one of their 6 boxes, and the weird thing is you don't know which box you're going to fit in because their rules are different than the rules for what the government is saying. Government, love them, hate them, whatever. We have to play in that sandbox. Now you go to a mortgage broker like Wendy or Scott here, and they're going to have not just 6 boxes, but they typically work with a bunch of different lenders. They're considered brokers typically. I think Wendy's a broker, and I think Scott works for Bay Equity, but Bay Equity has a ton of different boxes to fit you in. They're both fantastic. What happens is you're going to go to them, and they're going to say, okay, I have William Huffman here, the qualified buyer. He's got a 680 credit score. He's got 5% down, and he's got excellent employment. He's qualified for a $450,000 purchase price according to what we run. Now, they take that information and they shove it out to all these different lenders. And this lender's going to say, well, according to us, he actually qualifies for 475 because of his DTI, debt to income ratio. We're going to give him this interest rate of X. Well, then this one over here says, well, he fits to us as well. We're only going to give him $400,000 because of his debt to income ratio, but we're going to give him actually a lower interest rate. So interest rates are not set in stone. So when anybody says all this bull crap about interest rates dropped, for who? It's bullshit. It's absolutely, oh God, I'm getting pissed off. When somebody says interest rates drop, For who is the first question you should see, and for what? Now, your position is very, very unique to you, and you have a very specific requirement for yourself, right? So if somebody says interest rates dropped, you qualify for more, that's such an absurd thing to say. It doesn't make any sense whatsoever because it's such a blanket statement. I hope I haven't convoluted the situation here, but interest rates are not interest rates and are not interest rates. A plus B does not equal C. 1 plus 1 does not equal 2. It's ridiculous. Sometimes 1 plus 1 equals 11. I don't understand that, but here it is. I'm going to kind of get off that horse for a second because I could go down that rabbit hole for a long time. Once again, please reach out to the professionals. And if you have a lender that you trust, reach out to them. If not, like I said, Wendy and Scott are fantastic. I work with others, and I have in the past, but these are the two that I just work with the most. So no hate, no shade on any of my other lenders that I work with on this video. There's this thing called PMI, premium mortgage insurance, private mortgage insurance, whatever the hell you want to call it. I've heard it called PM both ways, but PMI. Typically what happens is PMI is another thing that's added to your PITI. There's principal, interest, taxes, and insurance, and it's kind of an insurance, premium mortgage insurance. Honestly, it's just another way for banks to make more money. There's no way around it. Typically, if you have less than 20% down, they consider it to be riskier to lend you the money. So instead of having a higher rate, which would be smart, but they want to quote unquote get you with this lower interest rate, which is bullshit to begin with, then they're going to tack on premium mortgage insurance because you don't have 20% down. So it's just putting another tax on the tax or the insurance on the insurance. Absolute BS. Now, one thing that I do want to talk about this mortgage insurance MI is there are some programs out there like VA. One of the wonderful things about our veterans is they've done, like, thank you, like I get emotional thinking about it, is they actually have a 0% down product with no MI, no mortgage insurance. Wonderful product. Absolutely wonderful. If you're a VA, you need to be absolutely taking advantage of that. A veteran, excuse me, taking advantage of the VA benefit. It's fantastic. There's a lot of other programs out there as well that can help you with no down payment. Or what you can do is you can get a silent second mortgage. Now be careful on this one. This is where 80% of the home value is given to you by lender A over here, and then 20% is given to you by lender B. They get their full 80%. This 20% might have mortgage insurance on it, MI on it, but it's going to be a smaller amount. There are some legitimate programs out there like that. Just got to be careful. There's a lot of misinformation out there about mortgage rates, and when people start screaming from the mountaintops, mortgage rates have dropped, mortgage rates have dropped. No. The prime rate dropped. Mortgage rates may drop, they may not drop. Is it a good time to refinance? I don't know. Let's talk about it. Give me a call. I can answer basic questions. Is it a good time to buy a house? I am firmly in the corner of it's always a good time to buy an asset that will give you long-term stability. Now, notice I didn't call it an investment right away. I'm going to leave you with this, and I'm not being a negative Nancy or a negative Nelly over here. I believe that investments are something that give you a dividend, right? Like you earn money back on it. Buying a house charges you interest, so it's not necessarily considered the best investment. Now, but didn't you just say I'm a firm believer in this and that and blah, 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 and the average net worth of a homeowner is 36 times that of a non-homeowner? Absolutely. That is very, very true. Real estate is a fantastic long-term investment. Don't sit here and try and think you can game the market. Don't think you can try and time the market. You're going to buy slow and sell high and look for foreclosures and all this stuff. No, you're paying a mortgage. You've heard this stupid line before, but it's true. You're paying a mortgage. Is it your mortgage or your landlord's mortgage? That's what it is. I firmly, unequivocally believe that. So if you can afford to get into a home, let's get your ass into a home. If you don't have a down payment, let's talk about DPA, down payment assistance. There's grants out there. There's free money. I shit you not, there's free money out there. There's this first generation home buyer thing. Yes, there's some loopholes to jump through. It's not easy money, it's free money. Next time you hear somebody say that the rate's gonna drop, the Fed's gonna drop the rate, ask, does that affect me? And if you don't know, ask me. And if I don't know, I'll ask somebody else. Understand that you're paying somebody's mortgage. Maybe it's not just yours. And the only bad time to buy or sell is when you absolutely have to. I truly believe that. I hope you found this bit of my ranting and kind of getting passionate about this whole home ownership thing. I truly believe it should be a right and not a privilege. You know what? Let's get after it. And if you liked this content, if you get down with my passion, if you understand that I'm a no bullshitter, if this is the type of content that you're looking for, awesome. If it's not, I'm going to keep scrolling. It's all good. All right, everybody. I love you all very, very much. Be safe out there. We out. Deuces.